go live now to the trading floor at Societe Generale and Asia equity strategist Todd Martin. Todd, let's first of all get your views to what's going on. I mean, is it really at the moment where we are in the capitulation phase? How much further do we have to drop?
Well, I think we've now moved from capitulation to liquidation. I believe that fundamentals are kind of getting thrown out the window and everybody's moving towards cash. There's signs of this in the offshore renminbi market, where the renminbi offshore rate versus the onshore has now moved to a historical low. That tells you that either Hong Kongers or mainlanders are moving money back into cash and possibly using that to repay debts or just to get ready and to get more liquid. There's other signs, such as utilities in Hong Kong have massively outperformed, I think something like 58% year to date, and the yield on the utilities are now still fairly low, around 3.7, but they're probably going to get lower because everybody's going to get into a conservative asset that they feel won't go down as much as others. So if you look at technicals, if breaking current levels versus the move that we've made since first quarter 09, you could see around 10 to 17% downside from here if you're going to hit the 50 to 62% Fibonacci retracements.
Todd, well, does this represent a buying opportunity now? And on top of that, if you do decide to buy at this point, are you trying to really be a hero?
Well, I think we are getting near, the end game where markets get to their lowest valuations. I guess the one thing that's concerning me right now is this liquidation phase. We had Bernanke make a statement, over a day ago, and he didn't deliver anything extra other than Operation Twist, and this is where we are now. So there is not going to be, I think, much more additional support unless there is really truly required from an emergency. So this is why the markets are looking down through the abyss, the deflationary abyss. And now China, the one thing that's concerning me with China is that we had a big capital inflow number yesterday showing up, I think, over $35 billion in August. And the A-share market actually went up 2 days ago on the back of that. It went up over 2%. And I think there was a misinterpretation on that because the actual capital inflow wasn't new investment. It looks like it was probably mainland money being repatriated to repay debt. So it looks like this cash crunch in China is starting to pick up momentum. We have this story on Greentown and the investigation by the CBRC on trust exposure. So there's several instances that we're going into a new down phase and a true credit cycle in China. And that can take on a life of its own, and this is concerning me.
Yeah, so, I mean, are you saying at the moment that the Chinese economy is teetering on the edge as a consequence of all this?
It's beginning to look like that. There are signals that there is a cash crunch that is picking up momentum. The offshore renminbi market, for one. The repatriation of capital, for two. And then now, if the developers are going to be forced into start selling off stock in the primary, that could cascade into a property correction. Now, this is just beginning, and we'll see how far China allows that to go. But once that gets going, you could probably get a lot of sellers jumping into that market. We're teetering right now, and the market is getting very scared, and that's what we're looking at right now.
I believe your colleagues went negative on commodities last week in London. Are you the same, and is that your worst asset class to be in at the moment?
Commodities is probably the worst that's going to get hit. I would say that anybody who's in an upstream commodity, and then that's your primary product, is going to get hit. I noticed that Jiangxi Copper was the worst performing HSCEI stock yesterday. If you're actually in a business which is seeing its input prices fall, and you've got some pricing power downstream, then you could come out okay. We were looking at the steel producers yesterday, but it still looks like steel prices are falling faster than iron ore at the moment, so that's still not one to be in yet. So we are, we're scanning our sectors at the moment, and it's pretty bloody. But I would say that, we're probably within 15% of the bottom now, but this credit cycle does concern me considerably.
Todd, great to have you on the program. Todd Martin there from Societe Generale. Let's